please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Reporters Diary, I'm Arundhati Ramanan, and our top focus this evening is the government's plan to issue sovereign bonds in the overseas market for the first time. Let's go across to Lata Venkatesh for more on this.
Well, in the backdrop of rising crude prices and a potential probably breach in the fiscal deficit target, we get news that perhaps the government is looking at maybe mulling an issue of a sovereign bond of $4 billion in the current year itself. In the past, the Reserve Bank has usually resisted the issuance of a sovereign bond. That will mean a dollar dependence on foreign investors, especially after being indebted to the IMF in the early 90s and having an unsavory experience. Both the Reserve Bank and the government have resisted dependence dependence on foreign lenders, especially for sovereign requirements. Now the government is once again probably looking at the idea. We don't yet know whether it is something that the government will follow through. But is this a good idea at this juncture or at any juncture? We ask two economists, Ashima Goyal, who's with the Prime Minister's Economic Advisory Council, and former Chief Statistician of India, Dr. Pranab Sen. Dr. Sen, Ashima, thank you very much for joining us. First to you, Dr. Sen, a sovereign bond issue, good idea?
Terrible idea.
Okay. Why, sir?
In short.
Okay.
Well, for the very simple reason, one of the things that you have to recognize is that if the government owes debt to its citizens, there can never be a case of sovereign default. It's simply not possible. The problem always occurs when the government owes debt outside. This is the problem all over Latin America. This was the problem in Greece. So it's anywhere where governments have actually borrowed abroad, they've run into problems. Japan, like us, has stayed off sovereign debt completely, and they've been much the better for it. Okay. I think it's a terrible idea. It's opening a floodgate which can lead to disastrous consequences.
Okay. Well, Ashima, I'm playing devil's advocate, absolutely bought over by Dr. Sen's argument, but the government could argue that we now have an inflation targeting central bank which congenitally, looks at, protects the rupee, in a sense, prefers an appreciating rupee than a depreciating rupee, because that would a depreciating rupee comes in the way of inflation targeting. For a whole host of reasons, therefore, the macros are already put in place. Why not go in for a sovereign bond to test the waters? Does the argument hold?
Yes, I think as long as it is limited, because we are already allowing foreign debt flows to come in. So we are borrowing from abroad in a sense within the country. But this is capped at 6% of the market turnover. Okay. So as long as it is capped in a small amount, it cannot lead to the kind of problems that...
Okay. Ashima, we will redial because it's a scratchy line. I'm coming to you in less than a minute. Let me get back to Dr. Sen. Dr. Sen, would that be an argument that we are testing the waters, it will be a limited issue, and therefore one shouldn't imagine that, you will go the Latin America way just because we are borrowing $4 billion. I mean, $4 billion would be what, 24,000 crores out of a total government borrowing of 6 lakh crore. Should one really worry?
No, the problem is all of these things start with small numbers. India is a very large economy, so it doesn't sound like very much. The point is that do you, as a matter of policy, open a door which says that if I run into a balance of payments problem, I will go abroad and the government will borrow money from the market rather than go through other means. We've done all kinds of borrowing which have been government induced, but it's never been sovereign debt. So I think it's a door best left closed.
Okay. What about the argument that foreign borrowers are also great disciplinarians, and therefore the very fact that a rating action or earning the ire of a foreign investor or foreign markets can discipline governments better?
Well, it's already happening. I mean, remember, the foreign markets are already influencing you through FPI.
Yes.
Now, whether that money is coming here for government securities or for private securities doesn't really matter that much. The fact is that in terms of our BOP finance, the FPI money is important. And that's about all the discipline that you need.
Okay. Well, point taken. You're convincing the convinced. But Dr. Sen, on a separate note, the idea of a sovereign bond is being whispered precisely on a day when there is, the news of oil going above $71. The government will, after a point, not want to pass on, especially in a year dotted with elections. And then it will have to bring down its excise hikes, its excise duty on petroleum. That will mean a fiscal breach. Do you think our fisc is already under threat in the current year with oil being the way it is?
Well, not really. You know, if you actually think about it, if anybody expected oil to hang around $40 a barrel, they were living in a fool's paradise. All right? We were seeing predatory pricing being done by OPEC, essentially to drive the shale oil producers out of business. It worked up to a point, but then they couldn't maintain it for very long. Now, what you should expect to see going into the future is essentially a two-person game. OPEC on one side and the shale oil producers on the other. And I would imagine that you will see oil yo-yoing within a fairly limited band of somewhere between $60 and $80. Right? Now, as far as our fisc is concerned, let's recognize another fact of life, which is that the government increased the tax to mop up the difference between $80, which was its own reserve price, and whatever the global price was. Right? Now, surely, until we hit $80, the government cannot complain that they've been unfairly hit. If they have gone and overspent that money or overcommitted those funds, that's just bad planning.
Okay. Well, that is usually the case, isn't it, Dr. Sen? The money that was earned from lower crude prices through excise hikes have already been spent or committed.
Sure. No, spend it by all means. There's no need for you to hang on to it. But don't spend it on anything which is of a recurring nature, which becomes an ongoing liability.
Fair point.
That's the question.
Fair point, sir. Ashima Goyal, back with us. Ashima, the argument that Dr. Sen is making, that it always starts small, and we all know the example of Latin America and what sovereign bonds, sovereign borrowing did to those countries. Therefore, don't even start. That door is best left shut.
Well, I believe in homeopathy, so a little bit of poison helps you become stronger, and you test the markets, you acquire experience, you get rated abroad, etc., and it helps you, it imposes some fiscal discipline. But I believe that predominantly you have to develop a domestic market. General advice is that your domestic market must be deep before you allow any of this foreign, even domestic, debt inflows. So we've been holding it as a low percentage of the total turnover, which is very healthy. But we must recognize that it's a tail, it can't wag the dog. And we must not allow it to wag the dog, because sometimes policy, the problem is even though it's a small amount, policy tends to overreact or over-worry about what will happen to those flows.
Oh, yes, $140 million, was it, of IMF loan was a tail that did wag the dog many, many years ago. Of course, we were a smaller economy.
But it was a larger percentage of your total market.
Fair point. But
so now you have grown.
Yes.
So this 4 billion or whatever is a very small percentage of the total market.
Yes, but we already are getting market discipline, as Dr. Sen pointed out. FPIs invest up to 5%, now 5.5% of domestic bonds. Is not that market discipline enough? Do we really have to expose ourselves to a dollar-denominated sovereign bond?
Well, as I said, as long as it's a very small quantity of total government borrowing and it remains that, then it is not unhealthy. I mean, I think that the homeopathic medicine works.
Right. Okay, well, just a final question to you. Do you think the fisc is under threat with crude going to 71 and a year dotted with elections when the government will be wary of passing it on to consumers?
Yeah, I heard Dr. Sen talking about this. I agree with him largely on his points, but I would just like to add something that for us, 70, because we earn from nations that gain when oil prices are higher, in terms of remittances and etc. So the government gets taxes. We've had a slowdown. Yeah. We were expected to gain from very low oil prices. We did not. Yeah. The slowdown continued. So I think we are seeing a recovery as oil prices become more normal. And at this level, it's healthy for the oil market itself. Yeah. Because you have supply being built up. Otherwise, you have zero supply and then an overshooting when demand rises. Sure. So it's healthy for oil markets. It's healthy for global demand. And it's healthy for our remittance and other export earnings, which will lead to an increase in government revenue. Right? So it's not necessary that a rise which in oil prices stays within our comfort band, necessarily bad for the fisc.
Okay, fair point. We could be making more export earnings because of exports to those destinations. Point taken. Right. Dr. Sen, just finally, the point that Ashima Goyal is making, that a little bit of poison is good, so long as we are able to keep that sovereign bond amount limited to $4 billion, say. You agree, disagree?
I disagree. She may believe in homeopathy. I believe in yoga, which is abstinence.
Okay. Well, I think that's extremely well put. Ashima Goyal, Pranab Sen, thank you very much for joining in and putting us the pluses and minuses, the allopathy, the homeopathy and the yogic approach that we should have to borrowing to save the fisc. Thank you very much. With that, time for a break.
Absolutely, Lata. Thank you so much for taking us through that discussion. But on that note, it is time for us to take a short break. And coming up, oil is on the boil once again as Brent crude hits 4-year highs. More details on the other side when we return. Welcome back. You're still with us on Reporter's Diary. Straight to a news break from the banking space. After the SFIO, the CBI is also going to probe a loan of over 5,000 crore rupees that was extended to Mehul Choksi's Gitanjali Group. Utkarsh Chaturvedi joins us with the details. Utkarsh, what else is the CBI saying about this case?
So at this point of time, what we know is that CBI has started probing the loan which was extended to Mehul Choksi's Gitanjali Group. Now remember, this was a loan of somewhere around 5,280 crore rupees, which was led by ICICI at this point of time. Now what we are picking up is that there will be no separate FIR which will be done in this case. In fact, in the current probe against Mehul Choksi, this whole matter will be taken off. Apart from that, what we are picking up is that the questioning of overseas officials of other banks is also on at this point of time. What we are picking is that 2 officials of Canara Bank from Bahrain is being questioned by CBI. Also, CBI is questioning 1 official from Bank of India Antwerp branch. So clearly, what CBI is really looking at in both of these cases, first in the Mehul Choksi loan, is that on what basis was this loan given, and again, was there any quid pro quo really involved in this? And secondly, when it comes to the questioning of the overseas officials, what CBI is looking at is that whether all the due diligences were followed by the overseas bank officials or not.
Absolutely, Utkarsh. So the CBI there probing Gitanjali Group. Thank you so much for those details. Moving on, talks of the United States and its allies considering airstrikes against Syria have sent crude prices to a 4-year high. So let's bring that chart up for you. The Brent crude is trading above the $71 per barrel mark, while the WTI NYMEX is trading close to the $66 per barrel mark. Now, expectations of a disruption in supply were heightened by the pan-European air traffic control warning that air-to-ground and cruise missiles could be used within the next 72 hours. The threat follows a suspected poison gas attack in Syria last weekend. We won't let another glut resurface in the oil market. A strong promise coming in from the oil minister of Saudi Arabia, the world's largest oil producer. He was speaking to the media on the sidelines of the International Energy Forum, a gathering of oil producers and consumers in New Delhi. We also spoke to the country director of Asian Development Bank. He believes that in case prices cross the $70 per barrel mark, it may spur inflation in India.
When oil approached $150 in 2007, Saudi Arabia was extremely concerned at that time, and we called for a major conference in Jeddah, Saudi Arabia, to try to cool the markets down and arrest that escalation. We will not sit by and let another glut resurface.
India being facing a lot of crude oil imports, so we see one risk is crude oil price. We cannot really predict the crude oil price for the future. So if the price level goes, say, up to, say, beyond $70 per barrel, so that may start to affect the inflation in India.
Oil marketing companies cracked in trade today after reports emerged that the government has asked them to absorb up to a 1 rupee per litre price hike in petrol and diesel. As a result of this move, OMCs will see an erosion of margins by 1 rupee from the current 3.3 to 3.4 rupees per litre. So HPCL and BPCL ended over 7% lower, while IOC finished with losses of 6.5%, as you can see. The government's rationale for this move is a steep rise in global crude oil prices. Sources tell CNBC TV18 that a cut in excise duty to lower prices has been ruled out by the government. We spoke to HPCL chairman M.K. Surana. He said that they haven't received any such notification. Take a look.
Sir, there are reports that OMCs have been asked by the government to absorb 1 rupee per litre on both petrol and diesel.
We don't have any such input. I've seen some media reports coming up, and there were a lot of people who were asking. We don't have any input, at least to that extent. Second thing is the price not changing cannot be directly attributed to this. The pricing is a function of 15 days rolling price.
On that note, it is time for us to take another short break. But coming up, the government's Air India divestment plan witnessed another flyby. More details on the other side of the short break. Stay tuned. Welcome back. You're with us on Reporter's Diary. We don't have any intention to buy or acquire any airline. That's Emirates' response to CNBC TV18's query on whether they plan to acquire debt-laden Air India. Remember, the last date for submission of expression of interest for Air India is the 14th of May. Emirates further added that they are currently not looking to buy or acquire any airline and that they will partner with other airlines only if it makes commercial sense for them so far. Jet Airways, Indigo and SpiceJet have ruled out bidding for Air India. On to the latest on foreign direct investment in the tobacco sector. The Department of Industrial Policy and Promotion met 24 stakeholders from the industry to discuss FDI in the sector today. Remember, the centre had floated a cabinet note in 2016 to completely ban FDI in tobacco sector. This decision, cigarette manufacturer in favor of the ban, while foreign companies are opposing restrictions of any sort. Currently, FDI in tobacco is allowed in franchisee, trademark, brand name and management contracts. Defence Minister Nirmala Sitharaman today launched India's 4-day-long defence exhibition, Defence Expo 2018 in Chennai. The biennial event will be formally inaugurated by PM Modi tomorrow and is being attended by major international and domestic defence firms. According to the Defence Minister, the agenda of this Defence Expo was to change India's image as an importer of India as an exporter of defence products.
This year you will have in addition a very clear accent on India as a manufacturer and seller of defence equipment, India as a manufacturer and not just selling to India but with a potential to export. Also many of them who are already exporting their wares as defence manufacturers.
We are concerned like everybody else, but I think I must also add here that the Honourable Defence Minister has taken many steps in the last 3 months to, let's say, get the policy, the DPP 2016, which was the main thrust of the new policy, to resonate with Make in India and Indian manufacturing.
If everything fructifies, we are talking of north of 50,000 crores worth of products that we are working on. From a company that used to only make, logistics vehicles for 400-500 crores. In the last 1 year, we have gone from about 400 crores to about 800 crores. I think we have won like 19 of 23 tenders that we competed in.
I'm very happy and proud to having finalized the partnership with Shinmeva, and this is an exclusive partnership. With mutual trust, we believe we can give an excellent ecosystem for military seaplanes to our Navy. Contours of the final partnership and the project, scope of the project, will depend upon what final decision is taken by the government.
That's all the action from India's mega defense expo in Chennai. Now, after a weak start, Dalal Street managed to close in the green for the 5th consecutive day. The Nifty held on to the 10,400 mark after breaking the level in early hours of trade. The Sensex closed above 33,900, while mid-caps recover 132 points from lows to close flat to positive. Bank Nifty recovers but still closes below the 50-day moving average, dragged by SBI and ICICI Bank. The market rally was led by metals, IT index and autos, which rallied anywhere between 0.5% to 1.5% in trade. The biggest laggard, however, in today's trade were oil marketing companies. That index tanked more than 2% in trade. And with that, it is a wrap on this edition of Reporter's Diary. Many thanks for watching, but stay tuned. Coming up next is First Time Home Buyer.